Canada just posted the worst jobs report in 4 years, and a pension fund just lost 10 billion with a B due to private credit.
But like when we're looking at the broad scope of the economy, we lost a bunch of part-time jobs but added full-time jobs. So there's like all these little mixes in there, and it speaks to just how mixed the story of the Canadian economy is right now.
Canada is sliding into chaos as the job market implodes and billions disappear from pensions. And somehow the people running the country still sound like everything is under control. That's the official story right now. The numbers, though, tell a very different story. Canada just delivered one of the worst employment reports in years. Over 110,000 jobs disappeared in 2 months. Yet the government keeps describing the situation like it is a minor bump in the road. I have to ask something simple. When exactly did losing 6 figures worth of jobs become normal economic management?
The unemployment report that we're going through is the tip of the iceberg. It's the private credit that people should really be worried about right now, which we'll be getting onto in the last stage, because Canadian pension funds are losing tens of billions of dollars.
The job market in Canada didn't stumble, it got smashed. In one stretch, the country lost about 66,000 jobs. Then another report showed another 25,000 gone. Add those together and suddenly you are looking at more than 110,000 jobs wiped out in 2 months.
We got jobs numbers out this morning showing Canada's economy losing 25,000 jobs.
Economists were expecting the opposite. Forecasts suggested roughly 10,000 jobs would be added. Instead, the labor market produced the worst surprise in roughly 4 years. That kind of gap between expectations and reality tells you something important. The people making predictions clearly do not understand what is happening in the economy that they are supposed to be analyzing.
Employment seekers are facing one of the most competitive markets in years. For every 3 candidates, there's only 1 job.
The unemployment rate sits somewhere between 6.5% and 7.1% depending on which report you read. Government voices quickly jump in and say that the number is not that bad. I find that explanation fascinating. The unemployment rate dropped slightly in one report because fewer Canadians were even looking for work. That's not recovery. That is people giving up. When workers stop searching, they disappear from the statistics. The spreadsheet looked healthier while the real economy quietly gets worse. It's a clever trick if the goal is to make the numbers look less ugly. To say the jobs market is collapsing when we're going back and comparing with a jobs report from the pandemic. I mean, it's just absolutely insane. But there is another statistic that explains how rough things really are. Statistics Canada shows roughly 3 job seekers competing for every single opening. Think about that for a moment. 3 people chasing 1 job. That means 2 people walk away empty-handed every single time. Job fairs are starting to look like economic survival contests. In one event in Ottawa, more than 600 applicants showed up to compete for positions offered by just 21 employers. That's not a booming labor market, people. That is desperation lining up in neat rows hoping someone will get lucky. Getting into those pandemic-era levels there as well. And if you go into where the jobs are actually being lost, you've got wholesale, retail, trade. It's a broad amount of it's like broadly across all industries you're seeing jobs that are going. So young Canadians are taking the worst hit in this entire mess. Youth unemployment is now hovering around 12.8%. Some reports suggest as many as 1 in 5 young people cannot find stable work. That is the worst youth employment picture since the aftermath of the last major recession. These are not teenagers looking for extra spending money. These are students trying to cover tuition. These are young adults trying to start their careers. Ottawa loves speeches about empowering the next generation. Apparently, empowerment means sending hundreds of applicants to compete for a handful of entry-level jobs. After applying for over 324 jobs, getting 11 interviews, and 0 job acceptance letters back, I'm convinced I'm going to be homeless in a year. And the worst part is I am over $120,000 in debt because society says you're supposed to get a bachelor's degree and a master's degree. Listen to the stories coming out of job fairs and online applications. Students say they apply to 50 jobs before getting a response. Many of those responses are just automated rejection emails. Imagine being 20 years old, sending application after application, and hearing absolutely nothing back. That kind of environment shapes how people see their future. It shapes whether they believe that the system works. Governments often talk about productivity and growth. Those things depend on young workers entering the workforce. When those workers cannot find opportunities, the economic consequences show up for decades. It's happening in the US and it's happening in the UK. And you have to think Canada has no shortage of risky lending, residential real estate, commercial real estate, AI, doesn't matter what it is, there's just no shortage of risky lending available in Canada. Manufacturing is another place where the damage is becoming impossible to ignore. Canada's manufacturing sector has lost around 27,000 to 28,000 jobs in recent reports. That sector used to be one of the pillars of the middle class. Factory jobs supported entire communities. Those communities relied on stable paychecks that flowed through local businesses. When manufacturing weakens, it doesn't stay inside the factory gates. It spreads outward. Transportation companies lose contracts. Warehouses ship fewer products. Small shops near those factories lose customers. So anyway, economists had expected the Canadian economy to add 10,000 jobs and the unemployment rate to tick back up to 6.6% according to consensus estimates published by the Bank of Montreal. So the Bank of Montreal way off there. So does that give you much confidence there? Ontario sits right in the middle of that storm. The province recorded some of the largest job losses in the country. One report showed roughly 26,000 jobs disappearing there alone. Another estimate suggested Ontario lost as many as 67,000 jobs in a single month. That includes about 1,200 workers affected at the General Motors plant in Oshawa after the company cut one of its shifts. Those are real jobs attached to real families. A single shift disappearing might sound technical in press releases, but for the workers involved, it means paychecks suddenly vanish. Canada is just becoming a government country essentially, and this is with the job cuts, and there's meant to be more job cuts, of course, that are coming as well. The ripple effect spreads quickly across related industries. Professional and technical services lost around 26,000 jobs as well. Transportation and warehousing roughly dropped 23,000 positions. Those sectors are not fringe pieces of the economy. They are core infrastructure supporting everything else. When those areas start shrinking at the same time, the problem becomes much bigger than a single industry slowdown. It begins to look like a structural slowdown in the broader economy. Canada lost 25,000 net jobs in January. Here's the striking figure. Manufacturing alone lost about 27,500 jobs, and the rest of the economy only created a few thousand jobs to partially offset that number. The regional impact makes the situation even clearer. Ontario has been hit the hardest with tens of thousands of jobs disappearing. Alberta lost roughly 14,000 jobs and saw unemployment climb to its highest level since 2017 outside the pandemic. Some provinces such as Saskatchewan and Newfoundland reported modest gains. Those gains were nowhere near large enough to offset the losses elsewhere. The national picture still shows a labor market moving in the wrong direction. Ontario bore the brunt of these job losses. And while some provinces did see some gains, experts say there is a general feeling of uneasiness in the labor market right now. Manufacturing-heavy regions are particularly vulnerable. Many towns rely on one or two major employers. When one of those employers cuts jobs, the entire local economy feels it. Restaurants lose customers. Local shops see fewer sales. Municipal budgets tighten because tax revenue drops. Ottawa still describes the situation as economic turbulence. Turbulence is what happens when an airplane hits a small pocket of rough air. Losing more than 100,000 jobs in 2 months feels a lot more like the aircraft dropping thousands of feet. Meanwhile, government messaging continues to focus on stability. Officials talk about mixed signals in the economy. They highlight isolated gains like seasonal construction jobs increasing in one report. Construction often rises during warmer months because weather allows projects to move forward. That's not a long-term economic strategy. Building a recovery on seasonal fluctuations sound less like planning and more like wishful thinking. Families across Canada see the difference between political language and daily life. They see grocery bills that remain high. They see mortgage payments resetting at higher interest rates. They see young relatives struggling to find their first job. They see friends applying for dozens of positions with no response. When those realities pile up, the phrase stable economy begins to sound less convincing. It begins to sound like a slogan repeated by people who are hoping nobody looks too closely at the numbers. The story does not stop with jobs disappearing. While workers are struggling to find employment, billions of dollars are quietly evaporating inside Canada's pension system. This is the part of the crisis that should make people sit up straight. The Ontario Teachers' Pension Plan reported that about $10 billion vanished from parts of its investment portfolio. $10 billion. That is not a rounding error. That is the retirement money of hundreds of thousands of workers suddenly taking a serious hit. This pension fund manages somewhere around $250 to $270 billion in total assets. That means that the $10 billion hit came from a massive slice of money that was supposed to be carefully invested. The losses were tied mainly to private equity and private credit investments. Private equity holdings inside the fund dropped about $50 billion. That decline reflects a broader problem spreading through financial markets. Pension funds around the world were pushed towards riskier assets over the past decade. Low interest rates forced large investors to search for higher returns. Safe bonds were not delivering enough income, so money managers went hunting for yield. That hunt led them straight into opaque corners of the financial system where private loans and speculative deals became normal. Those investments looked brilliant when asset prices kept rising. Now the environment has changed. Interest rates climbed. Companies that borrowed aggressively are starting to struggle. Suddenly the assets that once looked valuable begin losing value. That is exactly what we are watching happen with Canadian pension funds. The problem is not just that the $10 billion was already lost. The real concern is that these investments sit inside a network of funds and lenders that is extremely difficult to track. Government officials continue to describe the economic outlook as stable. Stability suggests predictable growth and manageable risks. Yet, the numbers coming from the labor market and financial sector tell a different story. Job losses exceeding 100,000 in 2 months don't suggest stability. Pension funds losing billions in risky investments don't suggest stability either. Ordinary Canadians are the ones living with the consequences. Families facing layoffs must adjust their budgets immediately. Young people struggling to find work delay major life decisions. Plans to move out, start families, or pursue further education become uncertain. Communities dependent on manufacturing jobs watch their local economies weaken. None of these changes happen overnight. They unfold gradually as confidence erodes. Leaders keep talking about transition and modernization, but the evidence points to contraction and growing vulnerability. The real danger is not a tough adjustment ahead. It is that the decline may already be underway while policymakers still speak as if this is just another upgrade cycle.